Welcome everyone to our self-directed IRA and solo 401k Q&A session. My name is Natalie with Sense Financial, and we are a boutique financial firm specializing in self-directed retirement accounts with checkbook control. Today, Dmitriy Fomichenko will be answering all of your questions. And Dmitriy is the president and founder of Sense Financial, and he began his career in financial planning and real estate investing in 2000. He owns multiple investment properties in various states and holds a designation of Certified IRA Services Professional from the American Bankers Association. Over the years, he's taught hundreds of investment and financial planning seminars and mentored thousands of investors. So welcome, Dmitry. Thank you for joining us and taking the time to answer questions today.
Natalie, thanks for joining me, and looking forward to diving into those questions.
Yeah, we'll go ahead and get started. Our first question here is from Dan. He would like an update on the proposed Roth rollover rule changes and what could be the potential negatives to it.
Dan, there is really no update yet. We just heard the announcement recently. We sent out the update to all of our clients. That's probably how you learn about that. But the potential negatives to it is that with the Roth IRA, there is a 5-year waiting period. And so when you, according to this proposed legislation, if you move your Roth IRA over to solo 401k, then you will have to restart the 5-year period. That's number one. And then Roth IRA has some exceptions for the early withdrawal, such as first-time home purchase or education expenses, and the new bill does not seem to address those. So those are the only negative that I'm aware of, and they're not major negative. I think if this will go through, that's going to be a major positive. And again, if you don't have to move your Roth IRA over to a solo 401k, and if you do, then there are some potential negatives. But I think overall, it's an improvement.
Okay, next question here is from Jane. I'm starting a business using self-directed Roth IRA account. Any tips?
Jane, you got to be careful here. You can't start a business using your self-directed Roth IRA account. Retirement accounts are designed to be invested passively. You can't use your Roth IRA to invest into your own business. You possibly can use your Roth IRA to invest into somebody else's business, but it is not possible. It will be a prohibited transaction, in fact, to invest in your own business. So I need to understand what a little bit more details about the background is. So what I will recommend is schedule a call with me. Let's discuss the details. But again, generally, the answer is no. You can't use your IRA funds to start a business.
Okay, this question is from Costenzio. Is it possible to roll over funds from my Vanguard 403b account into my solo 401k trust? Can it be considered towards the remaining balance owned on my current participant loan?
Costenzio, you're confusing two different concepts here. Yes, you can roll over your 403b account or any other retirement account. At this time, the only exception is the Roth IRA. Any other retirement accounts can be rolled over into a solo 401k. The 403b and other retirement sponsor plans, the limitation there is that if the account is with the current employer, you may not be able to move those funds because your employer may restrict on doing an in-service distribution. If it's with the previous employer, you should be freely able to move those funds over to your solo 401k. That is considered rollover. Now, if you do have an outstanding loan, you have to repay that. Rollover is not counted towards repayment of the loan. So those are two different things.
Okay, our next questions, excuse me, are similar. So Sarah's asking, how do you own a house in a self-directed IRA? And Stephen is asking, how do I own property in my solo 401k?
Good question. You can own an investment property in your solo 401k, not the residence though. So when you're asking owning a house, it can be investment property, just not your residence. Your 401k is fully self-directed. There are no restrictions to investments except those that are limited by the IRS. And again, IRS limits with the solo 401k. The restrictions are you cannot invest in collectibles and you cannot invest in any transaction that involves disqualified person, which is yourself and your immediate family members. Other than that, you can own anything. So 401k can certainly own a rental property. The process for doing that is pretty straightforward. Many of our clients took advantage of that and purchased investment real estate in their solo 401k plans. But once you identify the property, you will submit an offer. The offer will be in the name of the 401k. Your 401k plan will go on the agreement as the buyer of the property. The earnest money deposit must come from the 401k bank account. You cannot use personal funds for that. You will open escrow and enter into an escrow, again under the name of the 401k. As a trustee of the 401k, you're the person who controls it, so you will sign all the documents, but 401k will be the buyer. And then if you pay in cash, that's pretty straightforward. If you wish to use financing, if you wish to use leverage, that is possible. You can use leverage to buy investment real estate in your solo 401k. The loan, however, must be non-recourse because as a disqualified person, you're not allowed to provide a personal guarantee for the loan. So conventional financing will not work. You have to use non-recourse financing. And that means that there is no personal guarantee. Typically, and by the way, most banks do not for loans like this. There's only specialized lenders and banks that do this. We do have a list of lenders on our website. Typically, those lenders will require 30 to 40% down. The rate will be a little bit higher than conventional financing, but it's still a great way to acquire investment real estate using leverage inside of your solo 401k. And then when you're ready to close the escrow on the property, the title will be taken in the name of the 401k plan.
Okay, next question here is from Stephen. Can I trade/swing trade with my solo 401k?
Yeah, that can be problematic because the brokerage may require you to have a margin account and you cannot use your 401k funds or pledge your 401k funds as a security. So that is a problematic. So generally, we do not recommend that. It's possible if you structure it correctly, but again, retirement accounts designed to be invested passively. So there are better ways to invest that.
This question's from R. Can the solo 401k own an LLC to buy property and limit the property liability to the LLC?
Solo 401k can buy a property. It can own the property directly in the 401k trust. Some people who are concerned about the liability inquired about using the LLC, just like you do here. It is possible your 401k can own the LLC and then LLC can own the property. The LLC needs to be structured correctly because it has to be IRS compliant with certain way that needs to be filed with the state. And then the operating agreement must reflect the IRS language in it. But it is possible. You got to keep in mind that generally speaking, and again, I'm not a this is not a legal advice here. I'm not qualified to give you one. You may want to consult with asset protection attorney on this topic, but generally speaking, the first layer of protection should always be adequate amount of the liability insurance. When you buy investment property, whether it's personally or in your 401k or an IRA, the landlord policy will have that liability protection. Make sure that you have adequate amount of liability protection there. On top of that, you can buy an umbrella policy. And if you buy an umbrella policy for the 401k, that will be separate from your personal umbrella policy. So your personal umbrella policy cannot cover your 401k properties, and vice versa. The 401k umbrella policy only covers properties that are owned by the 401k. You can buy those in increments of $1 million. And then on top of that, if you feel that you need additional protection, then you can do LLC. But LLC, potentially you may need to do multiple LLCs, because if you place multiple properties in one LLC, then all of them will be potentially exposed. So again, it is possible, but there are caveats that you need to be aware of.
Okay, this question's from Yulia. How can I get an accredited investor status for self-directed IRA LLC?
Yulia, the accreditation status for the you can't really get it for an IRA LLC, because that is technically you yourself. So you will have to qualify as an accredited investor, and that will then apply towards buying or acquiring any investments. Typically, if you invest in a syndication, the investment sponsor will require accreditation, and you personally will have to qualify, and then that can be applied towards your IRA LLC.
Okay, Tom is asking, what is the procedure from transferring money from my traditional IRA to my self-directed IRA?
Tom, that is pretty straightforward. If you're a client, then reach out to our office and we will give you step-by-step instructions. But generally speaking, this will be done as a transfer. If you have IRA with one custodian, you can move those funds directly to another custodian. It's not even considered as a rollover, so it's not even reportable. As long as it goes from one trustee to another trustee, it's not a reportable event. The funds are sent directly to the new custodian, and you're done. And then again, it's not a reportable event. But feel free to reach out to our office, and we'll give you step-by-step instructions and forms to complete.
Okay, this question's from Steven. Can I transfer assets from my solo 401k into a Roth?
Can you transfer assets from your solo 401k to a Roth? I believe you're inquiring about Roth conversion. And yes, you can do a Roth conversion in your solo 401k. If you're a client and you have a solo 401k plan with us, every plan that we establish does come with the Roth provision, allowing you to take any portion of your pre-tax funds and convert it into Roth. That is possible. You need to complete the Roth conversion form. You have to establish the value of the amount that you're converting. If it's cash, that's easy. Obviously, it's just a dollar amount. You can also convert in kind. If you own a property or any other asset in your solo 401k and you wish to convert that to Roth, that is possible. The property or that asset will have to, you need to obtain a third-party valuation. It's actually a pretty good strategy that if you own illiquid asset, it's possible to get the discounted valuation on that asset, so you can actually pay less taxes. But it is possible. It will be a reportable event and taxable event. The 1099-R will have to be issued on behalf of your solo 401k plan and reported to the IRS. You get a copy of that. Typically, that form is issued in January of the following year, of the year in which you do the conversion. Again, get the valuation, make sure that you issue a 1099-R. We can assist with that. Our office can assist you generate one and issue that electronically to the IRS. And then from that point on, Roth 401k owns the asset.
Okay, Ashot is asking, what is the difference between solo 401k and self-directed IRA?
Good question, Ashot. The difference between a solo 401k and a self-directed IRA. Well, a self-directed IRA is a retirement account that is held by the custodian that does not have restrictions, that does not impose restrictions on investments. So you can use a self-directed IRA to invest into virtually anything. You just have to abide by the IRS rules. And as a reminder, the restrictions for a self-directed IRA is that you cannot invest in collectibles, life insurance contracts, and any transaction that involves disqualified person, which is yourself and your immediate family members. And to give you an example for that, if you are involved in a business, your 401k cannot invest in that business. But a solo 401k, on the other hand, can also be a self-directed, but solo 401k is considered an employer-sponsored plan. You need to have a sponsor. Anybody can have an IRA. For the 401k, for the solo 401k specifically, not everyone will qualify. To qualify for it, you must have legitimate self-employment activity or own a business, and that's number one. And number two, you cannot have any employees working for your business. So if you meet those criteria, and you have to meet those criteria to establish the plan and also to maintain the plan. So it's not just you go get some consulting gig and then you stop that and hope to maintain the 401k. You gotta maintain the self-employment activity. But again, solo 401k, you must qualify for it. But solo 401k has some major advantages over an IRA. Number one, a contribution limit is significantly higher with the solo 401k. You can contribute over $70,000 for this year, the limit. With an IRA, it's $7,000. Solo 401k does not require a custodian, while with an IRA, you must have a custodian. There is a way to get the checkbook control by utilizing the LLC, but custodian is not required with solo 401k, and LLC is not needed to obtain the checkbook control. Solo 401k is established as a trust, with you being a trustee, meaning that you control it. If you use leverage to acquire real estate in an IRA, then there will be a potential UBIT implications. UBIT stands for unrelated business income taxes. Solo 401k is exempt from UBIT on leveraged real estate, so it's a great way to acquire real estate using leverage. You can also take a loan from your solo 401k. It's not possible to take a loan from an IRA. And several other distinctions as well. We actually have a webinar that we go into details on the distinctions. You can watch that, but those are the main ones.
Okay, our next question here is from Mick. Can I convert my solo 401k to a self-directed IRA?
Can you convert your self-directed solo 401k to self-directed IRA? Yes, that is possible. I would normally want to inquire with you for the reasons why we want to do that, because if you're able to maintain solo 401k, that is more advantageous way comparing to an IRA. But maybe if you own a business and you might be stopping your business, then and your eligibility stops, then yes, we've done it a number of times for clients who retired and want to continue to invest in alternative assets. Then yes, you can set up a self-directed IRA, and you can then transfer the assets from a 401k to an IRA. And self-directed IRA will accept in-kind rollovers, meaning if you have alternative assets such as investment property in your 401k that can be moved over to a solo from a solo 401k to a self-directed IRA. Yes, that is possible. Mick, I do encourage you to reach out and schedule a call so we can talk about the specifics of your situation. But short answer is yes.
This question is from Kelsey. What kind of alternative investment can I use my solo 401k for?
What kind of alternative investments you can use your solo 401k for? And the answer is all kinds of alternative investments. IRS does not give you a list of things that you can invest in with your solo 401k. You can actually invest it into virtually anything. What IRS does give you is the list of prohibited transactions. And again, to recap that, IRS states that you cannot use your solo 401k to invest in collectibles, and you cannot invest your solo 401k in any transaction where a disqualified person is involved. And disqualified person is yourself and your immediate family members, which is your spouse, your kids, grandkids and their spouses, your parents and grandparents. So essentially a vertical line. Other than that, you can use your solo 401k to invest in virtually anything. Just to list maybe some of the most common investments, as we already talked today, you can use your solo 401k to invest in real estate. You can, it can be single family rentals, can be multifamily, can be commercial properties, large apartment complexes where you invest as a limited partner into a large syndication deal. You can own real estate locally, you can own it anywhere in the US, and you can actually own it anywhere in the world. You can use your solo 401k to invest in precious metals, cryptocurrency. You can use it as a bank, and you can actually lend money to others. So as a private lender. So you can own trust deeds and mortgages. That's also common. Something I do myself primarily with my retirement funds. But again, there is really no restrictions. That's up to you. Just you got to be aware of the prohibited transactions. And other than that, invest in anything you wish.
Okay, next question is from Sam. How would I convert to Roth solo 401k?
I think it's a question similar to the one that we just answered previously. Yes, you can convert your solo 401k to Roth if that's what you're asking. It's I think your question is really short and maybe a little bit unclear. But if you're referring about Roth conversion, yeah, you can certainly do that. You can take any pre-tax portion of your existing solo 401k and convert that to Roth. It will be a taxable and reportable event. Contact our office. We'll help you with the mechanics of that. If you're talking about moving existing Roth funds, if it's employer-sponsored plan such as Roth 401k or maybe Roth 403b, you can move those funds over. Roth IRA cannot be converted at this point to a solo 401k. The rollover from a Roth IRA to a solo 401k is not allowed at this time, but again, there is a proposed legislation that might make that happen soon.
Next question is from Daniel. I rolled over a 401k from a past employer to IRA. Is it too late to roll that into a self-directed IRA?
Daniel, if you took your past employer 401k and moved it to an IRA, IRA is you're free to move that IRA anywhere else. So you can at any time move that IRA to any other IRA, including self-directed IRA. So yes, you can establish a self-directed IRA, and you can roll over your existing IRA to a self-directed IRA. No problems there, no restrictions.
This question's from Larry. My IRA with Forge Trust owns a single member LLC, and I understand that I need to go and register this LLC under FinCEN's BOIR website. For my LLC, who is the beneficiary owner, myself or Forge Trust?
BOIR stands for Beneficial Owner Interest Reporting. There is a new law which intends to fight money laundering. And under this new law, if there is an LLC or a corporation, remember it's not limited to LLCs only. So it's for any entity that is registered with the state, and that includes LLCs or corporations. Then those entities must be registered with the federal government. And you have to report beneficial owner interest. Again, it's not limited to IRA LLC only. Those are obviously applied to personal LLCs, personal corporations. So if you do have LLC or corporation, you must report the beneficial interest. And the deadline to do that, if you had existing entity in place prior to December 31st of 2023, then you have 1 year to do that until the end of this year. If it's a new entity, then you have to register that new entity within 3 months. So be sure to be aware of those deadlines. But if you're referring to the IRA LLC, then the beneficial owner is yourself. It's not your custodian. It's not custodian funds. Custodian has custody over your IRA, but custodian is not a beneficial owner. The beneficial owner of those assets is yourself. It's your IRA, and you will be taking distributions from that IRA eventually. So it's for your benefit. So that will be yourself.
Okay, next question's from Teresa. Can your solo 401k partner with yourself to invest in real estate, or must it be separate?
Teresa, good question. Can you partner with your retirement account to invest? And the answer, it depends. It might be possible under certain circumstances to structure such a partnership, but in most cases, such partnership can lead to a prohibited transaction. And let me give you an example. If you're looking at making an investment and you need X amount of dollars, and you don't have that much to invest personally, and you want to pull your 401k into this investment, then the question is, why are you using your 401k? And the answer is because you're unable to do this investment on your own. So by partnering with your 401k on this particular investment transaction, you're receiving indirect benefit from your 401k, which is you're now making an investment that you were not able to enter otherwise. And that will be a prohibited transaction. So again, in most cases, that's not going to work. You should keep your 401k separately from your personal investments. Keep it at arm's length, and that will help you stay out of trouble.
Okay, we will go ahead and start answering questions that were submitted here in the chat. Just want to encourage those who are still on or on here to submit any questions. First question here is from Kelsey. She's asking if we'll get a copy of this recording. And yes, Kelsey, we do send out a recording via email, so keep an eye out for that. Next question is from Christine. Can I use my solo 401k to invest property in other states as rental income, then transfer the property to personal residence when I retire?
Good question, Christine. If you buy a rental property in your solo 401k, how can you convert that to a residence later when you retire? That is possible. And the only way it is possible is for you to take in-kind distribution from an IRA. So while the property is owned by the 401k, there is no possibility for you to use that personally. You can't live in it yourself. You can't use it in any way, and you cannot benefit from that property personally while your 401k owns it. However, once you retire, you can take that property and you can take in-kind distribution. In-kind distribution means that rather than taking cash out of your 401k, you can take the asset. You don't have to sell the property to take a distribution, but you will have to appraise the property, determine its value, because that will be a taxable event, assuming this is a pre-tax account. And then you take that property as in-kind distribution. So you will retitle that property to yourself. You will report that distribution to the IRS. You will pay taxes on that distribution. And then once you take the property out of a 401k, then it becomes your personal property. You can live in it, you can gift it, you can rent it out, you can do whatever you want with it. It's your property from that point on. But that's the only way to do it. While it is owned by the 401k, there is no possibility for you to use that personally.
Okay, this question's from Vance. I am buying an investment property with a Roth IRA account in Alabama. The state requires a certificate of compliance to sell the property. Is there any reason why I should not register the Roth IRA entity in Alabama as a foreign entity to obtain the certificate of compliance?
Vince, I'm not sure I can answer that question on the spot because I'm not sure what this certificate of compliance is. If you want me to assist you with that, go ahead and email me some details. I can do a little bit of research and then I can get back to you. But I'm not sure what this certificate of compliance is. It probably something that is specific to that particular jurisdiction where the property is, and I have to research that.
Okay, next question here is from Sylvie. Because Roth grows tax-free, if I'm interested in investing in real estate properties, is it better to invest in Roth solo 401k or regular solo 401k?
Before I get to my answer, I just want to encourage you guys. I want to thank you for joining us and encourage you to go ahead and submit your question. I hope just by listening to other people asking the questions, you're getting some benefit because there might be some questions that you may not even think on your own, but you're learning something. So don't be shy. There is no such thing as a stupid question. If you want to ask something, go ahead and ask. You will benefit from it as well as others. But now back to a question from Sylvia. Is it better to invest in Roth solo 401k or regular 401k? Well, it actually doesn't matter whether you invest in a real property or making any other investment. The concept is the same. You're investing because your investment will grow in value. Real estate will appreciate, and that typically tends to have a significant increase in value over time. So yes, if you can make that investment using a Roth funds, then yes, that will be tax-free gains. But there is no simple answer to that because it's not like you have $100,000 in your Roth 401k and then $100,000 in your pre-tax, and you're considering making an investment. Which one do I make? You probably have money in a pre-tax, and you're might be thinking about doing a Roth conversion. So if you're thinking about doing a Roth conversion, then there is a number of factors that you need to consider. And that is your current tax bracket. Also, it is the potential appreciation on that or gain in that investment. Then on top of that, also your current age, how much time you have for that asset to grow. Other things to consider is your current tax bracket compared to what you expect your future tax bracket to be. So the short answer is yes. Investing inside of a Roth IRA or Roth 401k will be tax-free. Qualified distributions will be tax-free, but most people don't have that much in Roth, and they probably consider a Roth conversion, and that is a more difficult question to answer, which everyone's situation is unique, and there is no simple answer that will be equally applicable to all.
Okay, we have a question here from Daniel. Can I build a rental home on a vacant land that I own, meaning contract it myself and keep it as a long-term rental? Or will I have to hire a third-party contractor to build the home?
Daniel, first of all, if you own, let me read the question. Can I build a rental home on a vacant land that I own? Well, I don't see any reference to a retirement account here. So your question is unclear to me. I'm going to try to answer that maybe using a couple different scenarios. So if you own this property personally, you cannot use your 401k or IRA funds to build on it. That will not be possible. Now, if you own this land inside of your retirement account, then you must use your retirement funds to build on it. You cannot use personal funds. And to build, to do that project, you have to hire someone. You cannot build it yourself because you're a disqualified person. You can control the project. You can oversee, you have the say to decide who's going to be the contractor on this project, which material you're going to use, what kind of improvements you're going to make on the property, but you do not have the, you're not allowed to do any work yourself because you're a disqualified person. So again, that question was a little bit unclear, but hopefully I gave you an answer using those couple different examples.
He did specify that it's through his self-directed IRA funds. Anything else you wanted to add there?
Yeah, so if your retirement account owns the land, you have to pay for it using IRA funds, and you cannot do any work yourself. That project has to be outsourced because you're a disqualified person.
Okay, follow-up question from Christine. In connection to my previous question, the mortgage paid for the rental property will consider contributions to the solo 401k. And when I converted the property from solo to personal, do I pay the capital gains?
I'm not sure exactly I'm following on the mortgage paid, because if you're talking about taking a property out from your 401k while it has mortgage on it, that could be problematic. You might have to repay the mortgage before you take the distribution. But to answer your second question is, when you convert the property from retirement account to personal, will you pay capital gain tax? There is no capital gain taxes. That will be ordinary income tax because that property goes from the 401k Your 401k owns that. Now you're taking distribution of that property to yourself. So there is no capital gains, but the amount that of the distribution will be taxable, and you pay taxes at ordinary income tax rate. So no capital gain taxes, but just ordinary income tax rate will apply.
Okay, well, those were all of the questions, which concludes our session today. Just want to once again thank everyone for joining us. Quickly want to mention that our next session is going to be on Monday, May 6th at 11 a.m. Pacific Standard Time. So if you're able to join, we'd love you to ask any additional questions that you may have or just listen in. But once again, thank you for joining, and I hope you all have a wonderful day.
Thank you guys for joining. I enjoyed answering your questions. I hope you all learn from at least some of those questions, even if they don't apply to you directly. Every time you join, you will learn something. And keep investing, and keep sending those questions so that you and others can learn. Have a great rest of the day.